Good morning, everyone. It's Marshall Gidler bringing you the morning comment for November 17th. The dollar's lower across the board on lower U.S. rates. U.S. retail sales on Friday surprised on the upside, and U.S. bond yields began to rise, but the big thing seems to have been a fall in the University of Michigan's 5-year inflation expectation gauge to 2.6%. That's near the record low of 2.5%. It pushed U.S. interest rates back down. And then later in the day, gold started to rise sharply as a poll out of Switzerland showed the yes vote getting more support than expected. This really hit the dollar, and it began to plunge. Now, U.S. Treasury yields have continued to decline in early European trading today. That may explain in part why the dollar is lower against all its G10 counterparts. We had a G20 meeting over the weekend. As you know, it had nothing to say about FX. The leaders agreed to boost their collective GDP growth by at least 2%. But the fact is, raising global growth has been an aim of the G20 all this year and before as well. But growth is still anemic, particularly here in Europe. So I don't think the G20 promise really means anything. Speaking of anemic growth, Japan's third quarter GDP fell. That's a big disappointment, as the market had been expecting some recovery in growth after the plunge in the second quarter. If you remember, Japanese growth collapsed in the second quarter after they raised the consumption tax. The continued fall in GDP in the third quarter makes it more likely that Prime Minister Abe will call a snap election and use his re-election as an excuse to delay the next hike in the consumption tax, the scheduled next hike. He'll reportedly hold a press conference tomorrow to make the announcement. Now, the implications for the yen are negative. For the implications for dollar yen, meaning are positive. During the European day today, Eurozone trade balance for September is coming out. In Sweden, we've got the official unemployment rate for October. It's forecast to increase a bit. From the U.S., industrial production for October is expected to rise month on month, but at a slower pace than in September. And the Empire State Manufacturing PMI for November is expected to improve. There are 4 ECB speakers today, including ECB President Draghi, who gives his quarterly testimony to the Committee on Economic and Monetary Affairs of the European Parliament. But, following the latest ECB meeting, he made it clear that the ECB is open to embarking on new measures if needed. So I don't think there's going to be any great surprise coming out during his speech today. For the rest of the week, the highlight will be the minutes from the October FOMC meeting on Wednesday. The minutes will provide details of the decision to end QE3 and what they're thinking about the improvement of the labor market. So any reference to when the members expect to start raising rates could be positive for the dollar. On Tuesday, we get the ZEW survey for November. On Wednesday, there's a Bank of Japan policy meeting, but following the recent additional measures they put in place at the end of October, I think it's very unlikely that they're going to make any more changes for some time to come. Also, we've got the Bank of England publishing the minutes of its November policy meeting on Wednesday, in addition to the publication of the FOMC minutes. Thursday is Global PMI Day. The Eurozone PMIs are expected to rise somewhat, which could support the euro. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gidler, head of Global FX Strategy at IronFX Global, wishing you solid trading.